What's up, YouTube? It's your boy Faith, and we're back for another banger video. We're gonna jump right into it. Let's go. Kind of f***ed that one up. Let me do that again. So we're back with another video. Thank you guys for tuning in today. I am going to show you guys how to use Tradingview. The money is in the charts. If you know how to chart, you can make a whole lot of fucking money. The dollars are in the data. Have you ever heard that saying before? A lot of people have heard that. The money is in the charts. That's how we talk about it over in the stock market. The dollars are in the data. If you can understand how to read a chart and understand how the data works within the chart, you can make a whole lot of fucking money. Boom! I got you right there, didn't I? Yeah, So let's just jump right into it. What are we wasting time for? Let's do it. All right, I know a lot of people look at charts and they're like, oh my God, what is this? I don't know how to read this. I was the same way, but I'm gonna break this down for you guys as easy as possible. So we're gonna start with, this is Tradingview, right? So you go to tradingview.com. Let me see if I can start you guys from the beginning. You go to tradingview.com and it's gonna look, well, it'll be another screen, but you have to create an account, of course. Go to tradingview.com. I'm gonna show you guys just how to use Tradingview basically. So you wanna make sure that you have the indicators that I really use the most. You don't really need too many indicators. You definitely need a volume indicator because you wanna see how many market participants there are. You want to see buyers and sellers and what areas they are in. So you want to make sure you have your volume indicator on. VWAP, which is volume weighted average price. That shows you where your sellers are typically during the day. If the price action is trading above VWAP, then we are bullish. And if the price action is trading below VWAP, then we are bearish. So I'm gonna show you guys how to do this, your supply and demand and your support and resistance levels. By the way, let me preface this with saying that this is a lot of people have been getting confused. So I'm gonna write this in a Word document and show you guys right now exactly what supply and demand is and what support and resistance is. So I have this on a Word document for you guys, right? And I want to be very clear. I said this before, I will say it again. Supply and demand and support and resistance are the same exact thing. Say it with me. Supply and demand and support and resistance are the same exact thing. I have a Word document for you guys. If you want to take a screenshot of this, feel free. Bam. Supply and demand, support and resistance. I can even do colors. Hold on. Demand is where you want to buy at. So make this green, and support is also where you want to buy at. Make this green. Supply, resistance would be red. So it is the same thing. Bam. Support and demand, same thing. Supply and resistance is the same thing. I'll make these two green. Well, I'll make these two red as well. So green is where you want to buy at, or where buyers are sitting at, and red is where the sellers are sitting at. Screenshot this. I hope this video helps you guys. Let's get right into it. So let's start with, let's do crowd. So I have these levels on crowd, CRWD, CrowdStrike Holdings. So we'll do supply and demand, and this is how I use my Tradingview. So I do the same thing I just told you guys with the colors, right? So when I'm charting, whenever I plot a supply or a resistance level, I try to make that line red. Whenever I plot a support or a demand level, I make that line green. Let's go to another ticker. Let's do Apple. One of my favorite tickers, one of my favorite stocks, especially to own long term. Right now I'm on the daily chart of Apple, and you want to typically start off with a higher time frame. So this is what I have. I'm showing you guys my exact setup. So I have the 2 minute, which I don't typically never really use the 2 minute, but I start all the way at the monthly, the weekly, the daily, the 4 hour, hourly, 15 minute, and the 5 minute. I typically trade on the 5 minute chart. So I'll typically start, we can start at, I really don't even use the monthly like that, but you can use the monthly to find macro support and resistance levels if you need to. And when I say macro, I mean a bigger scale. So you want to start looking at things at your charts from a bird's eye view, right? If you were in an airplane 30,000 feet in the sky looking down, you would be able to see so much more of the world, right? you got to do that, the same thing, the same exact thing when you are looking at charts. So I plotted this weekly level, this weekly trend line on Apple that has been holding pretty well, actually. It doesn't have to be perfect, but you see I started here at this level back on Monday, March the 2nd, all the way to current. And you see how it's just been kind of holding this trend line on the monthly chart. Well, excuse me, this is a weekly trend line. So I'll go here on the weekly trend line. And it's just been holding this weekly trend line very, very, very good. Now, when you see something like this, you want to respect these macro levels down to the T if you can, right? So if it was to break, as long as it's holding this level right here, you're good, especially on a bigger time frame. So the bigger the time frame, now you don't want to start looking at yearly charts and 6-month charts. Like, I found that this information has never failed me on the monthly, weekly, daily, 4-hour, hourly. And I really don't even use the monthly like that. I'll typically start at the daily. If I want to see like a bigger view, I'll start at the weekly. But these are the time frames that I use. They're right here. So what this means is, if I'm on the weekly chart, that means that each one of these candlesticks, the red ones and the green ones, they represent 1 week of time. If I go to the monthly chart, each one of these candlesticks represent 1 month's worth of time. You can also know that this is correct by just hovering over one of the candlesticks. You don't even have to hover over the actual candlestick. Just make sure that the cursor is lined up with it, right? So you see at the bottom, it says right here, it says Friday, November the 1st. The bottom, you see? Oh wait, you guys can't see because hold on. Friday, November the 1st, right? At the very bottom. Make this full screen. Friday, November the 1st, right? Now, if I move over to the left, one candlestick, it should say October. So this is November. Now, if I move to the left one time, because we are on the monthly chart, which is here, 1M, Apple, 1 month, NASDAQ. November, if I go over to the left one, it should say October at the bottom. Over to the left one, bam, October. If I go over to the left one more, it should say September. Bam. If I go over one more, it should say August, and so on and so forth. Bam, August. July, the next candle should be July. Bam, the next candle should be June. Bam. Each one of these candlesticks represents 1 month's worth of time. Now, if you go back and take it even further, you can do the weekly. You don't even have to keep going back. You can actually just type 1W on your keyboard and type enter. 1W, which is 1 week. It's the same concept. Here, bam, 1 week. This is November 18th. The next one should say November the 11th. Bam. 4th, November the 4th, bam. Each one of these candlesticks represent 1 week in time, depending on which time frame you are in. So if I go to the daily, you type in 1D, bam. November 21st. The next candle should be what? The 20th. Yes, you got it right. The next candle after that should be the 19th. Yes, you got it right. So bam, the 21st, the 20th, the 19th. 18. Oh, the 15th. That is weekend. That's a weekend right there in between those 2 days. 15, 14, 13, 12, and so on and so forth, right? We can go through these all day. What's after the daily? The 4-hour. So yeah, you'll see, bam, November 21st. This is also the 21st. And then the next one should be the 20th. I'm sorry. It's still the 21st. They go by they're doing the entire day. All right. You can also change your settings too. So I had to change, it was giving me the dates in a different format, and it was also showing military time. I believe I changed that already, but you can just go to your settings and change that. You can also change your theme if you want. I know some people don't like this particular theme, like the black theme. So if you go to your top left and then you scroll down, you can go to theme, which is here, click it, and it's gonna change to white. I don't like the white theme. It's a little tough on the eyes. Depending on, I would have to change the colors of some of these things. And I just think that the dark theme is just easier on the eyes, in my personal opinion, but it's your account. You can, whichever one suits you the best. For those that are asking, you can change these as well. So what this is if you see this blue shadow in the background, that's post-market, right? That's after the market has closed for the day. This is post-market. The yellow shadow background, whenever price action is trading within the yellow, that's pre-market. If I zoom in a little bit more, if it's not a color, these are your trading hours, your normal trading hours from 9:30 a.m. to 4 o'clock Eastern time. So blue is post-market, orangish, whatever color this is pre-market. These are actual trading hours time. And as you can see, this is where we currently are now. and I'll take it to the 5 minute. This is where we currently are now. Post market. This was today's price action for Apple. Bam, today's price action. Bam, it rejected off that 230 level. Now we are in post market. Tomorrow, you'll see this little bronze slash color in the background. That's pre-market. That's right before the market opens, and it'll be right behind this this shaded blue color as well. Why are my hold on, let me change settings, because my stems are supposed to be white. My wicks, excuse me, are supposed to be white on both. So yeah, you can go to just right click, hit settings, and you can change. Here it is, the post-market and pre-market hours background. These are the colors that I just showed you guys right here. Pre-market, this post-market, excuse me, this is pre-market, and these are the colors that I have them. So you can click this and change the colors to whatever color you decide that you want. Yeah, time zone, New York. Oh, say session, extended trading hours, or regular trading hours. I have my extended hours on, so yeah, that's pretty much it. So I go and to a higher time frame, and I chart. You know, if you can chart, you can trade. The dollars are in the data. You see what happened here? I drew this hourly level on Apple, right? I'm on the 4-hour time frame, but I drew this level from the hourly time frame, and it was holding here, came down, up, rejected off of here, bounced off that hourly level. Big bounce, big bounce. Pullbacks are healthy. Pullbacks are healthy because the market moves in a series of swing highs and swing lows. So you don't want to ever see, not ever, but if you see a stock just kind of shooting up without any pullbacks, expect some type of pullback is about to happen, because pullbacks are healthy pullbacks, right? So if a stock makes a $10 move and it gives back 20% of its gains, or it gives back $2, right? That's a healthy pullback before another push higher. If a stock makes and this has to, maybe I'll teach you guys about the Fibonacci retracement levels as well. So if a stock makes a $10 move and it gives back $6, that's not a strong sentiment to the upside. It gave back 60% of its gains. If I'm Apple and I make a $10 move and then I give back 60%, or I retrace 60%, which is why they call it the Fibonacci retracement levels. That's not a strong move. You want to see, so I'll show you guys how to use the tool. It's right here. Fibonacci retracement levels. You can go, so if it's in an uptrend, you want to plot your levels from down to up. And if it's in a downtrend, you want to plot your levels from up to down. Most recent swing high, swing low to the most recent swing high. Then you have your 0.23 level. Your 0.23 level, your 0.382, 50% retracement level, which is your 0.5 level, and then you have your 0.618 level and 0.786 level. At that point, if I make a $10 move and I give back $7.86 worth of that move back, that is not a strong move to the upside. So you probably shouldn't be looking for longs there, at least on a longer time frame. But that's a Fibonacci retracement levels, and you guys can Google that and YouTube that. That's a story for another time. But I drew this hourly level, and as long as it holds this level on a higher time frame, you're fine. You see what happened once it finally broke this level though. It broke this level right here at 230. I'll just call this level 230, right? Which is the level that I plotted, 230.08. Once it finally broke this level, it made a huge drop down to 220. It gave back $10 worth of its gains. But it started to find support right around this 220, this 221 level. A bunch of buyers stepped in here. You can see the wicks. So whenever you see wicks on either side, if you see the wick on the bottom, then that means that buyers are stepping in and they're buying up the stock, right? And you see, once you start seeing these wicks like this and candlesticks, I can go into doji candlesticks and indecisive candlesticks and all of that. We're not gonna go into all of that now, but once you start seeing wicks at the bottom on a higher time frame, that means that buyers are starting to step in. Once you start seeing wicks at the top, like you see this wick here, this one here, it's a big wick on a 4-hour time frame. Sellers are starting to step in. Sellers are winning the battle. The bears are winning the battle right now. You see it come down to this 220, 221 zone, and it starts to get bought up slowly but surely. A little bit of consolidation here, then it starts to get bought up. Sellers step in, buyers step in right here, and slowly but surely this starts to get bought up. This is a big, nice candle here. Rejection off of this, what level is this? 228, and then you start seeing, so honestly, I could do another trend line here and show you guys how it works on a higher time frame. We're on a 4 hour right now. This looks good. It's a nice trend line right there. When it's a bunch of wicks like that, you kind of want to just get the most important wicks, right? So when you start seeing these wicks break below this trend line that you drew, that means that this stock is getting bought up. If the stock starts making this price action here, and it breaks, so you can even go as far as extend this trend line. If it starts to break this trend line, then I would start to look for moves on the downside, right? Because it broke a massive macro trend line level. Once that trend line has been broken, this is how I would play it. I would wait for a break and retest. That's a high probability setup, right? A lot of people play break and retest setups. The thing I don't like about break and retest setups is typically your average trader will wait for the very first break of a key level to the upside and go long. And when I say go long, I mean buy calls. It works sometimes it doesn't. As I told you guys before, there is no one strategy that works 100% of the time. So you would typically, what I like to do typically is I like to wait. Sometimes I will try to take a momentum play to the upside if it breaks a key level and holds. Sometimes I like to wait for a break and retest. And basically what that is, let me see if I can show you guys an example. This will kind of be an example, right? So if you look at this level here, this 224 level. So check this red candle out. So it was trying to break this level. It had broke below. It was trying to break, couldn't break. Or it did break, but it was a false breakout. Bear stepped in, right? Held, tried to break, didn't break. Tried to break, didn't break. Tried to break, finally broke. Now, what I would have done is I would have waited on the retest of this level. Now, this was a 4 hour candle, so you can get a little bit more granular if you go to a different time frame, which is probably the 5 minute, which I would trade on. But it broke, and I would have taken it on this retest of this 224 level to the upside for a quick scalp. Quick scalp, you're in 2-3 minutes maybe, and you're out of the position. But as you can see, what happened on the higher time frame is that it didn't hold, right? It actually broke back below this level, gained a little momentum, some sellers stepped in right there, but on this candle right here, the bulls took over. And then you had a huge candle with 11 million volume. This is the indicator that I was telling you guys about. So you just want to go to right here to indicators, click that button, type in volume and hit enter, and you'll see your volume at the bottom here. And it'll give you an average volume, and then it'll give you a volume by each specific candle. In this candle, which is the 4 hour candle, there was 11 million volume on this candle. That's a pretty good, a decent amount of volume, but it was a lot of sellers here at this level and it just couldn't break. But it did hold this trend line here, so I still would have been long in these. You could have just bought calls and you can buy some time. That's what I like to tell people, because a lot of people can't really stomach the drawdowns, right? Especially if you're trading options and you're trading weekly contracts. The contracts move so fast. You really just have to know what you're doing. It's a skill set that requires a lot of time, patience, dedication, and discipline. But if you had drew this trend line and you wanted to enter somewhere in this area here, I would have bought calls. Maybe if you wanted to buy some time, maybe 6 months to a year out, you could have bought some calls, and as long as it's holding this trend line, you would have been fine. If you want to get a little bit more granular with it, like today, bam, this trend line, it started to break below this trend line today, but as you can see, buyer stepped in here. Buyer stepped in and it broke below this trend line, which I would have had a tight stop loss, but then it had this double bottom here. You guys can Google, I'll do it for you. Google double bottom chart pattern. All right, so double bottom. Now keep in mind that these chart patterns are not always, for one, they don't always work, and for two, they are not as probable to work if they are on a smaller time frame. So you could have went and looked at the double bottom, bam, touch support, rose, bam, touch support again. You could have bought calls somewhere in here once you started to see continuation, right? Same here, bam, rose, bam again. That would be a second touch of support, and it started to gain momentum because a bunch of buyers stepped in here and started to buy the stock up. It went from what, 226 all the way to 228. And eventually, I probably wouldn't have held it that long, but it went from 226 to 230. So it made a $4 move at this double bottom right here. So that could have been a play that you could have taken today. And for a move like this, what's today? Yes. So on Thursdays, the contracts tend to move pretty nice. They tend to move pretty nice, but just to be on the safe side, you could have bought next week's contracts, or you could have bought 2 weeks out contracts and put a little size on this, just so that if you were to experience any type of drawdowns, then they wouldn't be as much as if you were to play Thursday's contracts or tomorrow's contracts. So that could have been a way you can play. There's so many different ways you can play it, and people have so many different strategies. That's what I really like about this. It's like, it's all a game that we play. It feels like a video game in a sense, right? It's all a game that we play, and everybody has their own style. Doesn't matter what type of game it is, fighting game, shooting game, racing game, sports game. It's all a game. Everybody has their own style. It's just like, you have to figure out your style. You have to figure out what works for you. And that's the beautiful part about it, because I get to try a bunch of things. As a creative, I love just trying shit. What works? This works, this doesn't work, this doesn't work. Okay, like at least I get a chance to try things. But go on Tradingview.com. No, I'm not affiliated with Tradingview. I'm not gonna give you guys a link to sign up to get anything. Like, I'm not affiliated. This is a charting platform that I use. If you have a brokerage account of any sort, if you have Thinkorswim, if you have which is TD Ameritrade, if you have Webull, if you have Robinhood, you can go on these brokerage accounts, and typically they have their own charting software built within the app that you can use. You will have to pay for the data, so make sure you do that so that you can get accurate data. But typically they have their own charting softwares that you can use. You don't have to use Tradingview.com is what I'm saying. I am not affiliated with them at all. I don't have a link. You're not gonna get nothing free from, like, no. This is just a software that I use. A lot of traders use this software, and I know a lot of people who use the charting software that's inside of Thinkorswim, which is TD Ameritrade, which is now owned by Charles Schwab, by the way. But yeah, this is a play that I definitely would have taken today. At this reclaim of this level here, this zone right here, it held pretty good. I would have definitely taken calls, or you could have taken shorts off the open, off of this 230 level. You could have did that as well. So the very first candle, as soon as the market opened at 9:30 a.m., bam, it came, kissed this 230 level, and then it just proceeded to sell off until 227, a quick reclaim, and then it sold off even more until 226. So from 230 to 226, that's a $4 move that you could have caught. And don't try to catch the entire move of these things, right? Don't try to catch the entire move. Try to catch a piece of the move with a good amount of size. You could have caught a $1 move on that $4 breakdown as soon as the market opened, and with a good amount of size, if you put in $5,000 and you made 20%, made $1,000 for the day in 30 minutes. So don't try to catch the entire move. Just as professional traders, we look to catch a piece of a move, of something that's already happening. We're looking to go with the flow. We're looking for momentum trades, right? We're just trying to catch a piece of what's already going on. That's how you use TradingView, and that's how you chart. It's pretty easy. Just go on a higher time frame, and you want to apply your levels. Apply your levels where you see support and resistance at. Let me see if I can do one more before we get out of here. BA, let's do BA. BA is Boeing. These are the guys that make planes. I have a level here, 132. Where did I get this level from, you asked? I'm glad you asked. Let's see. 132 is clear support. So I'm gonna go to the daily time frame. Scroll over, 132, here. You see this bounce here? You see this level here? How it bounced right here, bam, 132 on the daily chart. This is a good bounce area, 132. It bounced here, it held here. This is resistance. This is, where is it trading at? Where's BA trading at? 150.59? Excuse me, 143.41. 143.41. But this 132 level is a good level of demand. This was recently, you see how it reacted off of this level here? It bounced here, then it broke, boom. Resistance, boom, resistance. Then it finally broke. Now it turns into demand, but it failed again. And it finally broke again. Bounced, bounced, bounced. It broke. Then it had a little bit of trouble breaking again, but it did break. and it bounced again. This time when it bounced off of that 132 level, look what it did. That was a nice bounce off that 132 level, from 132 to 179. That was a nice bounce. Beautiful bounce off of that level. $47 move, or 35%. That was a beautiful bounce, right? So if you go in and you plot these levels where you see supply and demand, or support and resistance, it'll be clear on your entries that you can take. The only thing left for you to do is to just be ready to execute. But the information is there in the charts. That's how you use TradingView. Find your supply and demand levels, or your support and resistance levels, and you trade them accordingly. If you understand this, you understand half of trading. Let me say that again for all the people who think that trading is this super sophisticated, complicated thing to accomplish. If you understand how to chart your levels, you understand half of trading. The other half is executing. That is completely dependent upon you. Completely dependent upon you. So I thank you guys for tuning in. I hope this information helped out. If you have any questions, comments, or concerns, please feel free to leave them in the comments. This is where we start to get down to the nitty gritty. Yes, let's make some money. The dollars are in the data. The money is on the charts. Let's do it. Tomorrow we have, I think we have some, I'm not sure if we have Fed speakers tomorrow. We'll get into all that another time, but yeah, I'm watching this tomorrow. I'm watching for this 594 level and this 595.50 level. Sorry if you guys can hear all that noise. They're over here cutting trees down. So, but yeah, tomorrow I'm watching out for either, it depends on what happens pre-market as well, because we could gap up or we could gap down right into demand. So either I would be watching for a 594 reject that kind of held this level here, and then at the end of the day it kind of just broke below and just kind of pushing down, approaching VWAP, but it's also approaching demand. So either a 594 reject or a 592 bounce, right? You always want to take wherever your price action is. You want to take the closest level to the top, closest level to the bottom, and those are your two plays for the day. Either a reject off of this level or a bounce off of this level. Or you can look for, if it happens to break this level pre-market tomorrow, you would want to look for a reject off of this level or a break and retest. You could look for a break and retest too. There's so many different ways you can play it. That's what I'm saying. I guess you have to sit and you have to study these charts, and you have to plot your levels, and you just have to be prepared to execute. If you understand this, you understand half of trading. The rest is up to you. I'll see you guys in the next video. DoYouHaveFaith.com. I appreciate you guys for tuning in. Let's get it.